Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Tuesday, February 17, 2015. This is a daily chart of the SPY, and what I'm going to call this market is it's kind of like you either have the nuts or you don't. It's like a game of Texas Hold'em. We're looking at the market across the table right now. The other guy is all in, and we're trying to figure out if he's bluffing or not. That's kind of the market we're in. It's a all in, you either have the nuts or you don't market. What do I mean by that? So here's where we are. So we've blown through the highs, okay, and we did exactly what I said the market would do, by the way, right? So it was going to be up on Friday. It was up on Friday. We were going to get to 2100 on the S&P. We got to 2100 on the S&P. Nobody should be surprised about those events. However, okay, if you go back a couple of months in these videos, probably into maybe November, but December, in that neighborhood, I was starting to talk about an S&P E-mini target number of 2135. I talked about it again last Friday or maybe Thursday, okay? Or maybe both. And it's what I call an unresolved number. What that means is, as the market was on the rise late last year, okay, my work came up with that target number as a potential upside target, okay? It was way in the future, or it was way up in the stratosphere in terms of where the market was at the time, but nevertheless, the number showed up in my calculations, so I did give it to you guys, and now I go back, and recalculate everything, and that number comes back up again, 2135 in the S&P E-mini. Why is that important? Well, here's where we are. You see this print here that goes up to 212.97, and this happened on December 18th of last year, okay? Now, some may call that a fake print. Whether it's a fake print or a real print, it's been there the whole time. So those fake prints tend to disappear, but apparently the market actually hit this number. However it happened, I don't really care, but the market printed this number. And this number here would probably coincide, and if I had to calculate it out, I would say it's probably pretty close to 2135 in the S&P E-mini if you compared the E-mini to the SPY. Okay, now, what do we have in front of us? We have a 4-day week, which normally means the market will get done in 4 days what it will normally do in 5. Okay, that being said, this is also options expiration week, which means that the market could certainly whipsaw around in both directions and get violent during options expiration week as the institutions start to play their normal monthly games. Okay, what else do we have? We have, from this pivot low here, which was on the 2nd of February, okay, if you count, not counting this pivot low and go forward, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days up. Now, I also have a cycle turn day due tomorrow. These can always be plus or minus a day. Minus a day is out because today was up and Friday was up. And when last week, and I mentioned to you that if Tuesday was up, the likely scenario is Wednesday should be down. And that still stands, but don't forget about the plus 1 day. So you have to give the market 1 day leeway. So here's the short story. In summary, what I believe is the case is I believe when you stare at the market across the table, I don't believe it has the nuts. And what I mean by that is I don't believe it has pocket aces, for example. I don't believe it has enough energy to get up to this level here right now. Okay, that's not to say later. I'm saying right now. Okay, so the turn day scheduled for tomorrow plus 1 day into Thursday, I still believe will take place. Now, why does that 10 count important that I told you about before? Because if you go back to a lot of pivot areas in the market, a pivot low like this one, a pivot low like this one, an important pivot that stands out to you, and you count forward, not counting that pivot, 10 days in this case, this is a daily chart, 10 bars, okay? That 10th or 11th bar, okay, a lot of the time, not every time, but like 80 or maybe even 85, 90% of the time will be the opposite direction. That brings us to tomorrow or Thursday. The turn day is scheduled, the cycle turn day, not this 10 count, but the cycle turn day is scheduled for the 18th plus at this point 1 day. So this is where we are in the market. I don't think it has enough energy to get up here, but if it was to go higher, I believe we would achieve this level if the market started to go up on some kind of an event that sent the market into an upward buying frenzy, melt up kind of scenario. So that's where we are in the stock market. Looking at my notes here, what else do I have for you? We're overbought. Well, you kind of get that sense anyway. Light volume today, that's of note. Very light volume today, just lighter than even the last several days. And that just tells me it doesn't have the energy. That tells me the conviction is not behind the buying in the market. It's really just going up to achieve, in my mind, the 2100 number, and that's where we achieved today. And so I am expecting a turn in the market. How long can the turn last? It can last over a week or so, but let's not get ahead of ourselves. Let's not even worry about that. Let's see what each day brings, and we'll take it one day at a time, and we'll let the market tell us what to do. We're looking for a signal. We're looking now for some kind of a reversal day. We're looking for the market to tell us that it's changing direction. That's the next phase of how we play this market. Okay, let's move on. Let's go to, by the way, the VIX was up today 5%, or 4.6%. That's another thing I wanted to mention. And what that means is, while the market was up slightly, or even closer to flat, but slightly up, the VIX was up 4.6%. So that's just something to take note of. That means that people are buying protection. People expect something different than was happening today and Friday to happen in the near-term future. That's what it's telling me. All right, let's move on. Let's go over to crude. We'll talk about USO. It's interesting because I had given you some information in the price of crude oil, I think, on Friday, and I said on Tuesday only, if the price of crude begins to close the hourly closes below $52, okay, and let's look at, in fact, let's look at it even an intraday chart. I can't bring it up. Let's look at the intraday 10-minute chart. Okay, and what happened was, you can see here we are. I think this is the beginning of the day right here. We gapped down a little bit, all right, and we immediately sold off, and this was as crude broke $52, but we didn't get down to the number. I thought we'd break 50, and that's what the market was telling me, and or my calculations and cycle analysis was telling me. But I thought we would get down in the 49, 75, 80, 85 area. But we didn't. We got down to 50, 81 and then reversed higher. So here's another situation where, in my mind, at least for the time being, for the near term, crude oil is unresolved on the downside to a break of $50 in my mind, okay, right now. Even though it's above 52 currently, I'm okay with that. I'm still going to look for lower prices in crude. And also, this week, I have a weekly cycle scheduled to top out this week. Now, it's always plus or minus 1 week, so minus 1 week is gone. So it's this week or next week, but we should be topping out. That's not to say there can't be higher prices. We can certainly rally into a weekly top in crude. So anything goes, but we should see lower prices in the near term, meaning somewhere after this week for the next few weeks. We should see lower prices in the price of crude, but we have to see it top out first, and we have to see a signal. And if we go down to the daily chart, okay, this is certainly not a signal that crude is topping out here. In fact, it had an intraday reversal day, so that's actually a bullish sign. So there may be higher prices yet to be had, and maybe we do get up into this area here. We'll have to see what happens. We'll take it one day at a time. Gold, another interesting scenario. Okay, this is going to be a little bit longer tonight, folks. I'm sorry, but we have a lot to go over. There's a lot happening in the markets this week. So gold dumped out today, and we even got, I'm going to go to the intraday again, because I had given you guys a number of 12.12 on the April gold futures contract, and we just blew right through it down here. Okay, I think this was coinciding with around that level before we broke down, but nevertheless, we gapped down and we went lower today, and we made a little bit of a low, I think. And if you look at the hourly chart, let's get the picture on what it looks like in the hourly. You see, if we can go close above, certainly close above this high here, which is 116.54, then we can see higher prices in the price of GLD. But I think this is very good support area, because if you go to a longer term chart, all right, even I think, is it on the daily I'm looking for? Yeah, let me show you this. If I can put up a fib retracement real quick. Even though my calculations were telling me that 12.12 was a number, okay, today we got down to about 1200 roughly. And let me see if I can draw this in here. Okay, here we go. And we got down to about 1200, and that number coincided with a 618 retracement from this low up to this high. So even though my downside was around 116, if you remember from Friday, I was telling you that 116 was a buy zone. Our low today on the price of GLD was 115.58. Nevertheless, I think this is a good area. So take that for what it's worth. And let's talk now about the bond market. Oh, by the way, where can we go if we bounce up from here in the price of gold? I think there's going to be two situations. I think first, we're going to end up in this 119 to 120 area, and that would be about a 40, let's call it a 40 off the low to $45 move in the price of gold futures. And if we can get through that area, we can take a run at double top. But all that would have to happen relatively quickly. And I'm going to talk about that more as the days go on. But for now, I think we have good support in the price of gold. At least my work is telling me we should have good support in the price of gold. I've been telling you this level would be good support. I'm still standing by. This level should be good support. Let's move over to the bond market. I'm going to talk about TLT. And it's another scenario that wasn't TLT, talking and typing, always. It's amazing how that works. Now, TLT is another one I've been discussing, and I gave you a couple levels of TLT. First, I started giving you this level, and I said, I don't think it's going to hold. And golly gee, it didn't hold. And so then I went over to the weekly chart, and I gave you 124.25. And what I'm going to tell you now is I would love to buy this at 124.25. And I'm not sure that we get there on this move. We may actually bounce at before currently or at this 20-period moving average. That's a possibility. This 124.25 area, this pivot high that was giving us our Fibonacci 382 retrace, while that number would be wonderful to be satisfied, especially this week, I just don't know that we get there. So kind of act accordingly. Do what you do. I think this is a good level of support between here and 124.25. I'm going to have to kind of expand my level of interest in buying into this level of the bond market, the 20 to 30-year Treasury bond. I think we're starting to see good support right now. So can we see lower prices? Yeah, I would love to buy in here, but I'm tempted to dip my toe in the water, take half a position right here, and if we get down here, great, I'll buy the other half. If we don't, at least I participated if we have a rally from this area, because the bonds are also due to have a weekly bottom on a cycle basis this week as well. And I'm just hoping in a kind of a way that it wasn't today, but it could have been. But anything could happen this week, so we'll see. It's options expiration week, and the markets are at a crossroads, so we'll see what happens. It's Texas Hold'em. It's all in across the table. Does he have it? That's where we are right now. I don't think he has it. I'm going to stand by that until the market proves me wrong, but you have to make a decision and go with it. We're in the risk business. Okay. That's enough for tonight, folks. I'm David Frost. Hopefully it's been helpful. This was another episode of Common Sense Market Analysis. Thanks for tuning in.